Nirmal, ladies and gentlemen. I'm Harsha Upadhyaya. We have with us Mr. Harsha Upadhyaya, President and CIO at Equity Kotak Mahindra Asset Management Company, joining in. Welcome to the show, Harsha, and a pleasure to speak to you as always. Harsha, the kind of moves that we've seen in the market, we had FIs which have been sellers over the last couple of months, and suddenly they've now returned to the market. And the kind of ride that we've seen from 15,000 to 18,000 was something that really no one expected. What's the sense that you pick up?
A couple of points to note. Apart from the liquidity surge that we saw over the last 2 months, I think clearly there seems to be a school of thought which believes that while inflation is quite high at this point of time, but the way the commodities have corrected, X of energy as of now, that is giving some sort of a positive boost to the sentiments. And also off late, we have seen even crude correcting from about, let's say, $100 to $105 per barrel to lower levels. I think this is what is making people to believe that over the next 3 to 6 months, somewhere inflation will come under control. So to that extent, hike in interest rates that we will be limited to next few months. So that is what is leading to a rethink in terms of what the valuations of equities from a medium to long term perspective. While September quarter results or maybe even December quarter results could be a little more issues are transient, then I think markets can remain quite upbeat.
Right. So, Harsha, overall, from what you're saying currently as well, clearly it's the FI support that has come in. What's the sense that you're picking up from the domestic mutual fund side of it? Because clearly we are seeing outflows on the equity front. Retail investors are also staying on the sideline. Do you think if we see momentum coming from there as well, the upside could be further from here on?
Clearly, over the last 9 to 12 months, we have seen retail participation in direct equities going down. Although the mutual fund participation was quite strong up until, I would say, month of June. For the last 2 months, we have seen some bit of weakness in domestic inflows into mutual funds. While SIP flows have been quite sticky and quite stable, what we have seen is some bit of profit booking as market has come back to earlier highs or almost near earlier highs. So our take is it's not that people are nervous about the market. It's just that maybe a small sink during the last peak, or maybe trying to book some profits at this level. Because if you look at SIP numbers, that's clearly very strong, and that gives us hope that maybe after a couple of months, we should again see quite a bit of improved flows on the domestic front as well. So at that time, if you believe that foreign flows are going to be strong, then definitely I think both the flows put together, that will be a very strong support to the market.
Right. So overall, if you see in terms of, the sectors that we can talk about as well, yes, there has been a lot of influence that's happening from global concerns that we've been seeing. Inflation has been one of the major concerns. Central banks coming and squeezing out liquidity is something that everyone has been watching out for. Now, from here on, do you think India as a country, from a markets perspective, is well insulated, not completely, as compared to the other regions as well?
Yes, we tend to believe that India is quite insulated from what's happening in the globe. Yes, from a sentiment perspective and also from the economic and business perspective, there will be some hit on Indian companies and Indian economy, but I think it's more manageable as compared to Western world. Clearly, our food inflation is under control, is likely to be under control given how monsoon has progressed, how reserve oil levels have been moving up, and also the fact that we have one of the highest levels of food grain stocks. If at all, the next few weeks are going to be weak on an unexpected turn of events. So clearly, food inflation is not going to be a worry for India. Most commodities, as I mentioned earlier, are ruling at lower levels as compared to previous years. So that should not again be an issue. The only issue that India has to worry about is crude, and thankfully that is also correcting off late. And also another point is in Indian economy, we never went to near zero interest rates. So to that extent, the negative real rates that are there in our economy are more manageable. With one or two hikes, I think we should be able to manage that. And also clearly with the kind of geopolitical turn of events that have taken place, and also how China and Taiwan have been posturing against each other, there is every likelihood that as you enter the next year and when the fresh allocations happen from foreign institutional investors, there is a very strong chance that India is likely to get a slightly bigger share of those flows. Anyways, over a period of time, India has become the second largest constituent in the MSCI Emerging Markets Index. But we believe that some of the flows that would go to China and Taiwan otherwise would probably come into India because one, China and Taiwan are more linked to global growth, which is obviously showing very, very weak numbers. And secondly, the talk of aggression from both the sides is also not helping the cause. So to that extent, our belief is not only India will get its share of flows from the emerging market portfolios, but also maybe slightly more because of what's happening to the rest of the globe.
Right. So overall, would it be right to say that from a longer term perspective, yes, we do expect to see good positive growth in India. However, there could be bouts of short term volatility that investors need not really worry about?
I would tend to agree with that. I think next couple of quarters, the current ongoing quarter and maybe even December quarter could be a little more volatile in terms of market movements and how businesses will shape up. But beyond that, we clearly believe that India is in a much superior state of affairs as compared to many other competing economies, and
Mm.
we should do definitely much better over the next 3 to 5 years.
Right. And overall, if you see in terms of sectors as well, taking into consideration that yes, there are a lot of concerns happening globally, would it be right to again say that it's best to stick with the domestic oriented sectors versus export oriented sectors currently, though IT could be treated as a safe haven or as an exception, maybe not a growth sector though?
At Kotak Mutual Fund, we clearly have been betting on some of the domestic
Mm.
sectors. We believe that the sectors which are closely linked to Indian economy and where the valuation comfort is there will be the ones to position yourselves into, because that's the pocket which will actually can surprise in terms of stability in earnings or even growth in earnings as you go ahead. And there is also a possibility of re-rating because some of these sectors have not really performed as well as some of the other sectors which are more export oriented or more
Mm.
stable. And to that extent, we believe that overweight stands on sectors which are closely linked to investment cycle, say industrials, cement, some of the infrastructure related sectors, and even banking, because as of now we are seeing significant improvement in the credit growth. We all know that asset quality issues have also kind of stabilized. So overall, I think these are some of the sectors that one can bet on, which are more linked to domestic economy, where
Mm.
while growth may see a bit of hiccups, but overall it's definitely going to be much better than the global growth.
Right. And with this as well, today in fact we had the mutual fund data that came in as well. What's your read coming out of it?
Clearly, SIP numbers have been quite stable and sticky, and even going ahead, I think it should be the case as far as the SIP flows are concerned. As I mentioned earlier, we have seen some amount of profit booking at Nifty levels which are closer to 18,000, which has been the case in the month of July as well as
Mm.
in August. And also this year, we should remember that the NFO collections in aggregate may not be similar to previous years, because in the previous years we had large categories available for launch. For example, balance advantage fund category, flexi cap or multi cap, some of these categories. But as you look into financial year 23 and beyond, most of these categories have been filled by most of the mutual
Mm.
fund houses. So to that extent, you are left out with the thematic fund launches, if any. So generally, thematic funds don't get the same kind of interest as compared to some of the diversified or large categories. So to that extent, inflows into NFOs could be a bit could be a little more subdued than the previous year. However, SIP numbers should be fine. And as I said, once the short-term bout of profit booking subsides, I think we should once again see better numbers overall.
Right. And then overall, very lastly, Harsha, what's the advice that you would give to investors who are looking to enter markets now?
As always, I think equity should be looked up in terms of a long-term asset class. It's inherent to volatility is inherent to equity markets. So to that extent, one should not try to take short-term bets on equities. We would advise that disciplined and regular investments will be the best way to enter and stay invested in equity markets. So from here on, since the valuations have also come off to fair range of valuations as compared to the peak level of valuations that were there maybe about 12 to 15 months earlier. So it would be prudent to actually make staggered, disciplined investments and stay with the long-term focus.
Right. So overall, this is a good time to look at markets as well. Thank you, Harsha, so much for joining us on the show. A pleasure to speak to you. As always, thank you. Stay safe and speak to you soon again.
Thank you so much. It was a pleasure speaking to you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.